Hi everyone, my name's Chris Tubby. I'm founder of Trading for Tomorrow, and this is my weekly macro outlook followed by some technical analysis. So let's get into it. Okay, so the first thing is, sorry there was no post last week. It's just because I was down with flu, so recovering, not fully, but I'm getting there. So, but one thing is that did reduce my trading considerably. As you know, what you've got to appreciate is when you're unwell, your attention span drops, and you know trading requires 101%. So I put on a few trades, but not very many. Okay, so let's take a look at what's happened in the markets. So earning reports continued with Netflix outperforming expectations. Banks trading desks once again provided a stellar performance in the US. And to me, this just brings a couple of things to mind. You know, perhaps it's time to check that they're not taking on too much risk again. You know, I'm sure we all remember the subprime crisis or the story of it. And of course, their greed causing many of those problems. And then secondly, you know, how about a windfall tax for taxpayers? After all, you know, we always bail them out. So why shouldn't we really get some of their profits too? Okay, so stocks, the indices in the US continue to make fresh highs. Well, you know, okay, so that's the Dow and the S&P. The Nasdaq is still below July's high. And then gold burst through 2700 and closed almost at the high at 2736. However, oil's not doing so well. That's weakening during last week, mainly just because traders have moved away from focusing on the Middle East tension, as it looks as though, you know, things are sort of calming slightly there, not much, but and it's moved back to supply and demand. I'll cover the Middle East a little bit later. Now, the dollar struggled to hold on to its earlier gains. Now, that said, you know, again, it's all about yield. So the euro was also weak. Of course, that's with expectations that the ECB is going to speed up their rate cuts, which I must admit I agree to. And the pound fared better actually and rejected the fib golden ratio, you know, the 618 level against the dollar. And you'll see that in the second part when I do my chart analysis. And of course, we've still got that prospect of Trump being re-elected, and with crypto regulators plus, you know, some really strong buy-in for the BTC ETF. It saw Bitcoin almost back to its all-time highs. It rallied back up just above 69,000. And while we're talking about Trump, so the US election now is just over 2 weeks ago. It just seems like it's just crept up on us. You know, it seemed as though it was so far away, and now here it is. And, you know, some voting's already starting. So the polls are still mixed, but I do have that feeling that Trump's going to win. I'm just not sure how much of a majority the Republicans will have, though. And, of course, if it's too close, then I'm sure there's going to be challenges. So it's not as if it's going to be a clear cut. It's really going to depend on if he gets a reasonable majority. Just, you know, if it's anything less than, I don't know, 2-3%, something like that, then I'm sure there's going to be lots of challenges going on about those results. So it could be a bit delayed. Now, if Trump does win, then tariffs will be quick to follow, I would guess. And that's not going to be just against China. It's also going to be the EU and other countries. And he was also saying that he wants to deport those in the US that are undocumented and entered without permission. And of course that could be millions. And again, you know, if you lose all of those, you know, they're taking up a lot of the part-time jobs, the cheaper jobs, you know, the lower paid jobs rather, that, you know, others don't want to do. And of course that could then lead again to possibly another squeeze on the jobs market. Now, you know, tariffs and jobs both of these could add upward pressure to inflation again. Now, whether Powell still has his job to worry about that is another matter. I don't think Trump's that much of a fan of this, and to be honest, I was surprised he gave him another term last time. Okay, so everything continues to point to a soft landing for the US at the moment. Inflation, yes, is above that target 2%. However, it's likely that it's going to get there sometime in 2025, probably the first half, but let's wait and see. As I keep saying, for now it's not about rates; it's about price that's deterring consumers. And as long as it does not start to creep higher again, then the Fed's got that room to start or continue to cut rates. Although it may have to be a little bit of a slower pace next year. So consumers are still spending. Surprisingly, it's the millennials that are really outspending all the other age groups. So yeah, the millennials, that's a surprise, but I wouldn't have thought that they would have had the decent enough jobs, but obviously they're getting well paid these days. And of course jobs do seem strong, but as I keep pointing out, it's only part-time jobs that's keeping those numbers so good. When it comes to Europe, it's not in such a fortunate position, and of course they're now paying the price for all that lack of investment in recent years. I think Germany is a prime example of that. That leads me to believe that the ECB will have to be more aggressive with its rate cuts to avoid the risks of recession. If it's not already too late, of course. Just remember that data is lagging. Now, I'm sure the likes of Germany will be hoping for a miracle from China, and of course its increased stimulus measures will not only boost their domestic market, but pushes into international trade too. So China's recent GDP was good, but it wasn't great. It's dubious doubtful whether they're going to get to that 5% that they've set as a target for this year. But maybe this late surge could help. And the UK retail sales were better than expected with good demand for tech. Consumers are still spending. Of course, we've got Christmas coming up now, so that could help boost. But for me, it just depends where these consumers are, how they're paying for all of these things, really. So, moving on geopolitically, there's still plenty of tension in the Middle East. However, it seems Israel have agreed to only hit Iranian military targets. That's why oil's come off. And of course, the US is continuing to push for a ceasefire in the area. How much influence they've got, threatening not to send supplies and all that, will it have much weight? It really depends on what Israel's already stocked and where else that they can get those arms from if the US decide not to. Now, North Korea may send 10,000 troops to help Russia in their war against Ukraine. Ukraine sent kamikaze drones into Russia to attack Putin's war factories. That sort of pretty much is it. Then when we look at this week, there's plenty of central bank speakers again, plus my favourite, the Fed's Beige Book. Again, it just gives those sort of less of a data-driven outlook, more of the Fed members, the regional Fed members, personal views on their expectations. Many countries are going to release their PMI data this week. I call it PMI week. Japan inflation data is also out. Bank of Canada rate decisions come in, and I expect another 25 basis point cut there. For me, my question is always to myself is, where's the next crisis going to come from? And I've mentioned this before, but I can't see anything other than debt. I mean, when you look, global debt tops sort of where I see the next financial crisis potentially coming from. It's over $300 trillion, and public debt will soon hit $100 trillion. So the big question is, can that continue? Okay, so all that leaves me to do is wish you a great week this week. And of course, please stay and watch the second of the videos, because that one is going to be where I do my technical analysis. There's another couple of slides coming up, sort of highlighting what I do, and feel free to reach out. And I will be doing a webinar on the 4th of November covering the US election and also the FOMC meeting that immediately follows that election. Okay, so let's move on. Now, I just want to sort of just talk a little bit here about my services that I offer. So there's a daily newsletter that includes global news, headlines, my views, full articles. That is a subscription service. There's one-day workshops. This will help you to discover if trading could be your next career or even just a second income. Otherwise, maybe you're already trading, but there's a few gaps that you'd like to fill in, and I can help you with that, because that will accelerate your trading and your performance. And then there's a 1-week intensive course. That's going to make you feel competent and confident after just 1 week. It's going to give you those foundations that you need to build your trading career on. And if you've got that in a trader, we'll find it. And now that does also include a free trading challenge. Then I do a Flexi Masterclass, which includes 6 weeks of guided learning. They can be split up. You don't have to take them all at once. And this is designed to provide you with all the knowledge and trading tools that you're going to need to navigate any market, and also on any asset class. I trade them all. And as I say, you can spread those weeks out over months if you need to. It's no problem for me. And again, that does include a free trading challenge. Now, trader mentoring, I'm doing more and more of this. And this is to help you reach that next level time and again. And I'm doing much more in the way of one-on-one sessions right across everything that I'm doing now, rather than sort of looking for big groups. I do provide a lot of trader educational content to individuals, exchanges and brokers. And as I mentioned earlier about the trading challenges, if you're looking for a funded trading account, then you can contact me for details just about the ones that I use, or you can sort of take one of the courses where I'll give it to you for free at the end of it. Okay, so then moving on to our disclaimer, just to make you aware that trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. And many companies provide leverage, so just be aware that you can lose substantially more than that initial investment. Everything I include in here is just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, you've got to consider the risks involved, definitely your financial situation, your level of experience, and your risk appetite. And of course, it's important that you only risk capital that you're prepared, but also that you can afford to lose. And if you've got any doubts whatsoever, seek independent financial advice, and do that before you risk your capital. So many people come and find me after they lost money, which is sad. They should come to me before. And yeah, so listen, that's it for part 1. I hope to see you in part 2, where I'm going to do some technical analysis.